Hey everybody, my name is Scott Lacey. I'm with the Arkansas Small Business and Technology Development Center. Thank you so much for being with us today. The ASB at the University of Arkansas is part of the Small Business Administration. We receive some funding from the Small Business Administration. We're related organizations, but we are separate. There's SBDC chapters located all over the country, usually associated with a major university. We're associated with the University of Arkansas, who we also receive some funding through, as well as some other local organizations. We like to think of ourselves as a one-stop shop for all things small business to help entrepreneurs start, grow, or repair or fix their businesses. And we've got specialists in-house from everything from startup to finance to marketing, branding, strategy, consumer packaged goods, logistics, technology, all of that great stuff. So if you'd like a consulting session, all you've got to do is just register on our website and we'll get you set up with an appointment. And again, all of our services are cost-free because we're grant funded through several different organizations to be able to help you guys out. All right, so here's my phone number and there's our website if you want to get in touch with us. So check that out. And then again, my name is Scott. I'm an ASB consultant. I specialize in finance, but also in the general startup process. So I do a lot of helping people get financing. I help them look at their books and be able to run their businesses better from a financial perspective. And I also do this. I do a lot of financial education for people as well, because just like all of you have a skill that helps you run your business better and be really great at what you do, I've got a skill that I've learned in finance, and so I just want to educate all of you on that to help you with your businesses. And if you want to get in touch with me, there's my email right there. I'd be happy to do a one-on-one consulting appointment with you. So today's topic, I need to change that. It's not fall anymore. It's definitely in the spring, even past winter. But this is just called Making Sense of Financial Statements. So this is just an introduction to financial statements, what they are, where they come from, how you use them, some basic metrics. And then if you want to dive a little bit deeper into it, into your business specifically, definitely schedule an appointment and we can go through it all together with you to help you become more profitable. All right, so what are financial statements? When somebody says financial statements, what do you think of and what are they actually? So what they are, their most simple version or simple explanation is that they are reports that show the financial health and the financial performance of your business utilizing financial data, numbers. So these are reports that you can look at, and if you know how to read them the right way, which you will by the end of the day, you will be able to know if your business is financially healthy or how healthy or unhealthy it is. And also you'll be able to judge the performance of your business over the past several months or quarters or years. So what are the three? There's three main financial statements. What are they? So the first one's called the balance sheet. The second one's called the income statement. Some of you may have also heard it called the P&L or the profit and loss. And the last one is called the statement of cash flows. And these are the three main financial statements that every company is always going to have, especially if you're a company with shareholders or several different investors or several different partners. You will always need to be having these three financial statements to be able to give to those stakeholders so that they can understand how the business is doing. So they're called the balance sheet, the income statement, or the P&L, and the statement of cash flows. We're going to go into what each one of those are, and I'm going to show you some examples in QuickBooks. So first question about these is, where do they come from? So the simplest answer is, when you make a transaction with your business, whether it's taking out a loan, swiping your credit card, paying your rent, paying your utilities, those are all transactions that your business does. Those are all transactions that occur within the normal operating cycle of your business, and those transactions create records in the forms of receipts or bank statements or credit card statements or any other record that they create a record, and those records will then go to your bookkeeper. Your bookkeeper will put those into your accounting system, and that accounting system will then generate these financial reports. So that's where all of this comes from. You take somebody out to lunch at Mexican place, you swipe your card, it creates a transaction record. That transaction record goes to your bookkeeper, or it automatically gets downloaded into some kind of accounting software. And then that accounting software takes all that data, puts it in the right place, and then it creates these financial reports, which you can then look at and see how much did you spend on Mexican food last month. So the next question is, I don't have a business degree. Can I really use these financial statements? And the answer is absolutely yes. They're really not that difficult to read once you have them explained to you. It's all very intuitive. It's all stuff that, it makes sense. It's logical. A leads to B leads to C. So you can definitely do this. If you were able to sign up and register an account and be here online and sign into Zoom today, you've got all the skills necessary to be able to read these statements at a basic level for sure. So how important is it to having a successful business? And do you really need to learn this? Like, do I actually have to go through this headache of being able to know what I'm looking at on these financial statements, looking at them every single month and being able to read them? And the answer is yes, you really do. Because if you don't, then you're not going to know how healthy your business is, and you're not going to know how well your business has performed over the past periods of operation. So if you want to know if is your business healthy or not, and you want to sleep well at night, and if you want to know if your business is performing well and know potentially how well you're going to do in the future, you need to know how to read these financial statements, and you need to know what they are. All right, so there are 2 other reports that aren't required. I do encourage everyone to always use them, but these aren't as important necessarily. Like, they're not required by the SEC if you're a public company. Like, they're not required by federal regulators if you don't have shareholders all the time. But these are the cash flow forecasts, and this is something you develop in-house, and just a budget. So cash flow is just like, hey, how much cash am I going to have next month and the month after and the month after in order to pay my bills? And the second one is just a basic budget, very similar to your household budget. You make that budget, you stick to that budget, and there's consequences if you don't stick to that budget and rewards if you do stick to that budget. All right, so now we're going to get into the 3 basic financial statements and what they actually are, and I'm going to show you some examples. So the first one is the balance sheet. So the balance sheet shows you this. It shows what the business owns versus what the business owes. So what does the business own? Well, the business owns these things called assets. So assets are basically anything that the business can utilize to generate revenue. You know, anything like that. And so sometimes those things are already, revenue, like cash. Like if you got cash, it's an asset. You don't have to do anything with the cash to turn it into cash. It's already cash. But equipment or vehicles or inventory, all that kind of stuff that the business can utilize in order to generate sales, or that is worth something to the business, that can be converted to cash, basically is your assets. So that's what the business owns. So that equation there that you see is assets equals liabilities plus owner's equity. That's the equation for the balance sheet. So if you ever look at a balance sheet, that's how it's going to be organized. There's these 3 categories in the form of this equation: assets, liabilities, owner's equity. And we just went over assets, which is what the business owns. Now, what does the business owe? Well, the business owes liabilities, and the business also owes owner's equity. Liabilities are anything that the business owes to people that are outside the business. So like if you've got shareholders, or if you're and your spouse are invested in the business, or if your mom and your dad or your grandpa is invested in the business, those are people that all like own a stake in the business. So they're considered owners. And so they're considered within the business. Liabilities are owed to people outside the business, like banks, credit cards, any other kind of liability that you might have that you owe to somebody outside of the business. And then owner's equity is what the business owes to the owners. So if you've invested money in that, that's where that money is going to be listed at, is underneath the owner's equity. Also, if you have any net profits, month to month from the business, and you leave those profits within the business month to month or year to year, those profits are also going to be moved over into the owner's equity account, because the owners, they own those profits because they're the investors of the business. So the balance sheet shows what the business owns, its assets, versus what the business owes in liabilities to people outside the company, and also what the business owes in the form of owner's equity to people who are within the company. Those shareholders, family, friends, you, the owner directly, that kind of thing. So that's what the balance sheet shows at its most very basic level. Some examples of assets, again, are like cash, equipment, vehicles. Even if you owe money on those things, they're going to be listed as assets. So like the actual truck that you purchased with a loan is going to be listed as an asset, but the loan on the truck is going to be listed as a liability. So they're both going to be listed there in this equation. But that's some examples of some assets. Liabilities, everybody kind of knows it's stuff that you owe to other people. And then owner's equity, like I said, is shareholder shares or investments or net profits is the examples of owner's equity. All right. And again, if you've got any questions, just leave them in the chat box or leave them in the Q&A, and I'm happy to get to those. The income statement. Actually, let me show you how to get to the balance sheet and show you an example of a balance sheet real quick in QuickBooks. There we go. So there we go. If you can't see QuickBooks, let me know in the chat box if you don't mind. So this is QuickBooks. This is Craig's design and landscaping service. This is just a fictional business. It's not a real business. QuickBooks, has this here for you to be able just to kind of play around in QuickBooks and get familiar with it. So other accounting software is going to be very similar. It's going to have this dashboard, and then over here on the left or top or right, it's going to have the menu. And you're going to want to find this reports button, and you'll click reports, and it's going to pull up reports. And see here I have balance sheet, profit and loss, and then down here on the right, I've got my statement of cash flows. So if you just click balance sheet, it'll pull up the balance sheet. And there it is. And the balance sheet, something I forgot to mention, is a snapshot in time of your business. So it's going to show, this moment today, what your assets, liabilities, and owner's equity are. It's not going to necessarily show like past performance the same way a P&L will, like we're going to get into in a minute, but it's really just going to show, hey, what is the status of my company in this exact moment today. It doesn't show things over a period of time. It just shows them at a single point in time. So we call it a snapshot. And that's what you're looking at here. So as of April 6th, 2020 is the date for this one. So we have assets, we have liabilities and equity, and we see that they equal here, which is great. That should always happen. That means everything's being done correctly. So let's look at our assets. So we've got current assets, and we've got some longer term assets down here called accounts receivable. Let's see, we've got the bank accounts, the checking account, and the savings account. They show as assets here for $2,000. Then accounts receivable, so that's money that people owe us right here as well. And then inventory assets, and we've also got some undeposited funds, which is probably just some cash hanging around in the office, for total current assets of $9,941. Of that $9,941, the amount of cash is $2,000, and it's undeposited funds, which should really be up here, plus $800 in savings, plus $1,200 in checking. So that's what, $2,000, $2,800. So basically, $4,000 in cash, which is great, and then non-cash accounts receivable $5,281 for roughly total current assets of $9,941. So that's great. So now we know what the business owns. It owns all this cash, and it owns all this accounts receivable. So what does the business owe? What does the business owe other people? Well, we've got accounts payable. So that's usually money we owe to vendors. So if, I'm a toy company and I've bought toys from somebody to sell, but I haven't paid them yet, then I would owe them, that wholesaler, $1,600. That's accounts payable. My MasterCard bill, and so then, and also my taxes that I owe to the state and to the federal government. Total liabilities, $6,131. And then my equity down here. So retained earnings, net income, opening balance equity, that's all, what the business owes to people within the company. And then with total liabilities and owner's equity of $23,436. So just see here, what I really want you to see is that when you look at this statement, you've got assets first, which is what the business owns. And then you've got liabilities next, what the business owes to people outside the company. And then lastly, what the business owes to people within the company. So if nothing else you take away from today, just know like, hey, when I'm looking at my assets, this is what my business owns. This is a good thing. And then this is what my business owes. And if your business owes a ton of money, then come and talk to me. And I would love to tell you whether or not that's a healthy amount to owe or an unhealthy amount to owe. And if we need to help you fix that, and then we can also look at your equity as well. So that's what your balance sheet is going to look like in the real world when you go to your QuickBooks or you talk to your accountant. All right, let's get to the P&L, the income statement, the profit and loss. So the very most basic structure of the income statement is this right here. It is at the very top, we just list your total sales, and then you subtract all of your expenses, and that leaves you with your net profit. So it's your sales minus your expenses equals your profit. So if you're a restaurant and you do $100,000 in sales, 100,000, sorry, I've got to switch microphones. Give me 1 second. There we go. All right, let me know if you can't hear me. Sorry about that. So if you've got $10,000 in sales and you're a restaurant, And then you've got, $8,000 in expenses. So 10,000 minus 8,000, that's going to give you a profit of $2,000. So it's very, very simple. How much money did I make from selling what I sell? How much money did I have to pay out, in order to make those sales, in order to cover my overhead, in order to pay rent, pay utilities, pay my employees, pay my insurance, pay for my inventory, pay for all that stuff. And then at the end of the month, how much was left over? And that amount that's left over is your profit. All right, so what does that look like in QuickBooks? We're going to get into that. So again, we're just going to go to reports. And then we're going to look at our reports here. We see profit and loss. And then here's our profit and loss statement. And I'm going to minimize some of these things so that you can see just the basic outline or the basic format. So we've got income or sales, 9,444 minus our expenses plus our other expenses gives us our net income or our profit, our net profit of looks like they had a loss here that month of minus 2,916. And that was net other income. So total net income is a net profit, net positive of 1,436. So it's income at the top minus all your sales equals your net income down there at the bottom. So let's look at our income. They've got a lot of different stuff listed for income here. So landscaping services, stuff they sold, plants, soil, sprinklers, the charging for installation and for maintenance and repair and all that fun stuff, pest control even. That gives them a total sales or a total income of 9,444. And then this next one that they've got here is called cost of goods sold. I'm going to spend about a minute on this, maybe a little bit less. So cost of goods sold is really important in any business. Cost of goods sold is the cost to the business of the goods that the business sold in that time period. It's different than inventory. When you purchase inventory, it's just on your books as an asset. It doesn't become cost of goods sold until you actually sell it. So if you're a toy store, you go buy a whole bunch of toys to sell to other people, you bring them in, and let's say you sell, half the toys that you bought, then your cost of goods sold is only going to reflect the cost of the products that you sold. It's not going to reflect the cost of the products that you sold plus the products you still have sitting in your warehouse. It's only going to reflect what you actually sold. If you would like some more explanation on that, definitely make an appointment and talk to me. I'd be really happy to explain that to you. So that's your cost of goods sold. That's something you want to pay attention to as a business owner. That needs to either stay flat or go down over time, or if it goes up, it needs to be in proportion to your sales. And then the next section is your expenses. So advertising, fuel, equipment rental, materials, accounting, bookkeeper, lawyer, all that stuff that you spend money on every month that we hate writing checks for every single month. Those are going to be all of your expenses. So then your income minus your expenses gives you your net income down here at the bottom. That's your net profit. So again, really today, just want you to see the basic structure of the P&L and how to get it. So income minus expenses gives you net income. Now, something really important about using your P&L statement. You want to be able to track how you're doing month to month because your P&L sort of shows things over time. So if I go in here, I do January 1 until the end of the last month, so March 31st, and I'm going to click to show this by month, run report. So now I can see my January performance, my February performance, and my March performance. So Q1 basically, quarter one. And so I can see, did my income go up? Did it go down? Did it stay flat? How did I do? Because I'm a landscaping business, so my income should be going up from January to March because spring's coming around. People want more landscaping. People want their lawns mowed. People need their homes sprayed. So I want to see, hey, did my sales tend up or tend down or tend flat? Because they should be going up. And so I can run this report by month and I can say, hey, January I did $1,000, February I did $4,000, and March I did $4,500. That's awesome. I can see that my sales are going up. If you don't know what a P&L is, or if you don't know how to pull this report, or if you don't, do your bookkeeping, you're not going to know month to month how your sales are doing, except based on your POS, which doesn't necessarily always give you the right information. It doesn't allow you to always see all of your different revenue streams. So you definitely want to be able to pull this report and know how to read a P&L to be able to do that. Likewise, that you do for income, you can also do that for your expenses.
So if I want to go down here and look at my expenses, as my revenue or my sales have gone up, what have my expenses done? Have they also gone up? Have they gone up proportionally? Have they stayed flat? What have they done? And I can see and compare January to February to March and see that they've increased approximately proportionally. It looks like you can do the calculation and get the percentage. That's another webinar. But you can see, am I being less efficient, more efficient as sales go up? And you can see that. And then you can also see your net income, which is your net profit. So I see a lot of companies, sometimes their sales may be going up, but sometimes just because their sales are going up, it doesn't mean their profit's also going up. See, this company, their profit's actually going down. It's negative out here in March, even though they've got, basically 4 times the sales in March than in January. So you really want to be able to pull these reports, and you really want to be able to pay attention to those things. All right. Next is the statement of cash flows. Again, if you've got any questions, just leave them in that chat box or the Q&A. So statement of cash flows is divided into 3 sections. It shows your actual cash coming in and leaving your business. The P&L, depending on the type of accounting system you have, it doesn't always show exactly the cash coming in and going out. It's a little bit different than the cash flow, and that's why they have the cash flow statement, is to actually show you the real cash coming in and the real amount of cash going out of your business every month, because the P&L doesn't actually show it 100% accurately. Because the P&L is really trying to show profitability, not necessarily cash flow, and those are 2 different things, which is also a different webinar. But the cash flow statement, has 3 different sections. The top section is cash flow from operations. Those are the core operations of your business. The next one is from investing activities. So if you buy land or buy equipment and you sell it one day and you make money on it, that's, making money through investing, but it's not the core part of your business unless that's the kind of business that you are. So we've got a separate section for those things that don't happen every single month. And that's just cash from investing. And then plus or minus cash from financing. So cash from financing is like getting loans and paying off loans. And so you don't get a new loan every single month. Like you don't go to the bank every single month and get a new loan to use your business. When you don't take on new shareholders every single month either. It's just kind of an occasional thing. It's not part of the core operations of your monthly business. So we've got a section for your cash from financing. And so if you net all those 3 things together, your cash from operations, investing, and financing, that's going to give you your net cash inflow or cash outflow for the month. And the main way that people use this is you do the cash flow forecast to be able to make sure that you're going to have enough cash next month to be able to pay your bills, or, just to pay the various obligations that you might have. All right, some basic key metrics. Oh yeah, I need to show you the example of that real quick. Okay, so reports. And sometimes it's not always listed because people don't use it a whole lot. So statement of cash flows, it's going to be down there somewhere. So here we go. So operating activities, investing activities, and financing activities gives us our net cash increase or decrease for the period. Excuse me. And then the total cash at the end of the period. Sorry about that. So operating, investing, financing, net cash increase or decrease, and then my total cash at the end of the period. And so this cash at the end of the period, if you go look at your balance sheet and you look at your cash accounts or your bank accounts, those amounts should total up to this amount. So you know how much cash you have. That's the place it'll be, and how you can know if your books are being done correctly or not. So operating activities, this is core activities of the business, so accounts receivable, inventory, payables, that kind of thing. All the adjustments made from net income. It's a little bit complicated, probably a whole webinar in itself. Happy to explain it to you. Investing activities, so this is like a note payable, and then we've got financing activities. They don't really have anything listed, it doesn't look like, and so cash at the end of the period. So there is the statement of cash flows at a very basic, simple level. All right, so basic key metrics that you should be looking for in your financial statements. Number 1, are your sales and profit increasing or decreasing or staying flat? Where are you going to find that information out that? You're going to go into your profit and loss statement or your income statement, and you're going to pull that report to be able to show January, February, March, April, May, month to month to month, or you could do it, 2019, 2020, 2021, and look on an annual basis. And then you're going to be able to see, are my sales doing this, this, or this? And it's going to help you to be able to run your business better and make adjustments. Next are my expenses. Sorry about that misspelling there. Declining, increasing, decreasing, increasing, or are they flat? That's also on your P&L. How much cash do I have? Go look at your balance sheet. That's going to be at the top of your balance sheet under assets, what the business owns. Is my debt manageable? You're going to look at your P&L, see how much money you're making, and then you're going to look at your balance sheet, at your debts, and you're going to make sure that the money that you're making is enough money to cover the debts that are coming due in the next 1 to 3 months and up to a year. And then how much cash did I actually generate this period? You're going to go look at your cash flow statement. And will I have enough money to pay my bills next month? You're going to want to look at your cash flow forecast and your cash flow statement. So that's just some real basic 30-minute overview on making sense of financial statements. It's a great introduction in order for you to make an appointment with us so we can look at your business specifically, look at its profitability, look at its health, and look at its performance and help you manage your business better so you can all make some more money. I would love to get together with you. And with that, you guys are either free to log off or I'm going to answer some questions. I've got to log everybody who has signed in real quick for our grant reporting so we can get credit for all this stuff. All right, that's done. Right now, I'm going to get to some questions. First question, is it possible you could send your availability? I'm stoked to meet with you regarding my educational tutoring. Yeah, sure can. So Nicole, the best thing to do is so I use a service called Calendly to book all my appointments, because if I didn't, I would spend half my week just emailing people trying to book appointments. So I have a link that I used with a service called Calendly, and it's gonna, when you click the link, it's gonna show you my available appointments for the upcoming, month. And you can just click any of those appointments. I can meet in person on Zoom or at a coffee shop basically, or in the office. So just click that link. So if you'll just email me, let me get you my email. There we go. Just email me right here at sl072@uark.edu, and I'd be happy to get in touch with you. All right, next question. Are my educational books part of my assets? So yeah, so your books that you have on hand that you're selling, those are going to be classified as inventory, and inventory is an asset. Yes. Which version of QuickBooks are you using in this webinar? It's just QuickBooks Online. QuickBooks Online. Do I provide training on QuickBooks? So we have to be careful. The answer is yes. It's limited. I can go over your chart of accounts and show you how to do basic entries, show you how to classify some things, make sure that you're set up correctly, basic navigation. But that's about all we do. It's just a very basic introduction to get you set up and running. We don't do a whole lot of hand holding once you're set up and once you're actually doing everything. I can check to make sure everything's being done correctly the first couple of times. But in general, we just have to be kind of careful with how much we provide that. But we do definitely offer some very introductory QuickBooks training. Yes, absolutely. All right, and yeah, so the person who just sent me their email, best thing to do to get in touch with us is just, yeah, okay, so you sent me your email. Okay, so I can just, if this webinar doesn't get rid of your email, if you don't hear from me, it's because I've lost your email when I close the webinar. But go ahead and send me an email and I'll shoot you an email as well. All right. Any other questions? Put them in the chat box or put them in the Q&A. Up to y'all. So we had these 8 questions already, and I've already gotten to all of those. Any more questions? So financial statements, so when you're thinking about them, just very simply, the reports that show your business's health and your business's performance. That's it, using numbers. Balance sheet, income statement, cash flows, they come from transactions going into bookkeeping, generating reports. All right. Thank you guys so much for coming. And if you want to get in touch, looks like we have one more question. Yeah, there'll be a recording on the website here pretty soon. Thank you all so much. Have a great day.